Traders, welcome back to another price action trading lesson. We're going to talk about how to identify high probability setups using price action rules. We're going to combine many price action rules together, but it's going to allow us to identify the right places on a chart where to enter. Based on pure price action, I can see that the bearish down move played out with the new extreme. Market is starting to consolidate. Buyers are buying this particular price level, and right now I can see that the market is pushing to the upside. So what I have to do is I want to follow the trend line rules. So I'm going to look for possible channel, and the spike and a channel is the best alternative because we have one steep spike up, flatter channel. Can we get a pullback to the exponential moving average and some nice to get pullback? We only have first entry long. We can't really enter, and market continues to work to the upside. So where the market is heading to? Well, I can see most likely to this particular level because we are trading a big trend range. As you can see, if we're going to zoom back, we have move up, move down, move up, move down. So I'm going to mark my resistance because when I'm trading a trend range, I always like to have the key levels marked because you want to follow the range rule. You want to buy low, sell high, and you expect sellers to sell at the top, buyers to buy at the bottom. So we have a breaking new stream for the uptrend. So I'm going to pause looking to go long. Now we have lower high, but this lower high is not really confirming much and it's breaking above EMA. Actually, when I see price session going higher like this, I was even playing with the possibility of drawing channel a bit wider, possible second entry long, but that was quickly negated. Market broke lower, and as we can see, price is working lower. It's pretty much confirming the range rules. Sellers are starting to sell at the top of the trend range. Push below EMA is confirming the bearish momentum, and now we have a failed second entry long, which is below EMA. Uptrend played out and can be classified as a failed second entry long reversal pattern, indicating reversal from bullish channel into bearish downtrend. So this is first decent high probability setup for today. The signal bar is good. I'm gonna align my channel a little bit better with these candles because the break is not convincing at all. And once again, I'm always looking for these channels. You can see how nicely this channel fits. So this gives me a bearish bias in this market. The target, once again, most likely bottom according to range rules. I'm not gonna be too worried about this. All I'm worried about is pull back to the EMA and selling a high probability setup in the form of a two-legged pullback. The bias is bearish. I'm only thinking about selling. I'm following this trend line rule. So we have a first entry short, can reset at each new low. First attempt to sell. Can we get a second entry short at the EMA? I'm always drawing the short on channels, as you can see, because I'm respecting the correction. There was no good second entry short at the EMA. I cannot sell second entry short far from the EMA under bullish bar. Remember, I'm in a bearish trend. I'm only selling below bearish bars. Okay, always redrawing the short on channels. Why am I thinking about selling, and am I thinking about selling? I am, because we broke close outside of this downtrend, so we expect new low. Once again, only first entry short, uptrend is in play. Even though I think market is going to go lower, I just cannot sell just yet. Okay, there was no second entry short, no problem. At least the trend line rule is working perfectly. And because we're at the bottom of the trend range, remember, we're combining many price action rules. These price action rules allow us to predict what's going to happen. Support, downtrend played out, so we expect market right now to rally to the upside. However, because we have FOMC announcement soon, we cannot really enter. As you can see, massive spike in volatility. Today, the spike up was actually quite controlled. We don't really see too much whipsaw up and down. And as you can see, these candles are not that big. The news really weren't that crazy, so we are actually able to trade the news fairly quickly after the news came out. But definitely don't be trading right around the news, because even if you're going to place the order and you can bet the direction right, you can get a slippage. There can be a lot of whipsaw. You can get stopped out just to see it go exactly where you thought it was going to go. A lot of slippage. It's not worth it to be trading around the news. A lot of people are gambling like this, but it's not really worth it. So let's just stay away from this, because you will have a lot of opportunities to trade after news come up. But you can see perfect price action, break new extreme. There was actually even a failed second entry short reversal pattern, which you can see works even during news. Sort of like a first entry short, second entry short. Failure. Now I'm gonna draw spike and a channel. This trend is right now looking quite strong. Spike up, channel. So I expect new high according to trend line rule. I'm also going to redraw the short on downtrend. I want to see two-legged pullback, second entry long. We have a second entry long here. It should be high probability setup, but it's not full at the EMA. I cannot really go long just yet, even though I expect market to go higher. Market continues to work higher, and notice how strong the trend is getting. Market keeps working higher. Look at this. Minimal bearish pullbacks. We never even broke below the EMA. This is controlled, strong uptrend. Because this uptrend is strong, I'm only thinking about buying, and it allows me to look consistently for better channel, because you can see how tiny bearish pullbacks are. A lot of small bars is working higher above EMA. Price action is correcting. Okay, you have first entry long, pullback, and now we have second entry long, but it never triggered. It didn't trigger above this bar. It is actually very close. Now I took this setup myself. I risked it. I was way too aggressive, and you can see I had a small little losing trade, not that big of a deal, because I was betting on the strength of the trend. But you can see downtrend doesn't have new extreme, and mainly it didn't trigger. It stalled, so I have to be patient. But now, as we can see, downtrend played out with the break, new low. And how does this pattern visually look like? It looks like two-legged pullback. Notice how broad these two legs down are. And this is the first time price action broke below EMA. We still expect new high for this channel. This is a strong trend. And this time, everything is aligning. Downtrend played out. We're back above EMA. Visual two-legged pullback. Great bullish bar. So this is decent high probability setup. Great long. Because the first bar, we actually broke truly below EMA. So because we need to get new high on retest, great visual second entry long, high probability setup. And this setup, that's the real money setup, because now we pushed above EMA. EMA is holding, so it's a sign that the bulls are in the market. They're going to get new high. Downtrend played out, so there's no reason for bears to be in the market. Tick lower, reversal up. This is a great high low. What is it confirming? It's confirming the visual to like a pullback. Gorgeous signal bar. Your stop loss always goes one tick below signal bar every single time you're buying. You enter at the highs, and market continues to work higher. Now, we have a break in new extreme, but I'm going to zoom back. How strong is this trend? Very strong. Especially if I'm holding the runner, it depends on the strength of the trend. If the trend is very strong, especially after FOMC, which can really make market move a lot, I'm going to be holding the runner at break-even. I'm not going to be trailing it too tight, because this is quite unusual structure. After FOMC, after news, the rally is most likely going to be significant, strong trend. So let the runner run, and true to its form, market indeed is working higher like this. So at this point, I'm going to clearly look for bigger channel, because the market is way more bullish. You can see how nicely the candles fit at the first channel. I'm going to copy it, put it at the top. So what's going through my mind? Well, clearly, I'm only thinking about buying. Minimal bearish pullbacks, a lot of small bars working higher. I cannot sell. I cannot go long far from the EMA, because what if it's going to pull back just like it is now? I want to see two-legged pullback at the EMA. Can we get it? Okay, we can see consistent count reset, matching highs, only first entries, new high, first entry long, and now we have second entry long. Now this second entry long is not the easiest one to take. Also mini new low, first attempt to sell, second attempt to sell, failure. So kind of like a two high probability setups in one. Now they're matching highs, but you can see the lows are not static. In fact, it keeps creating high lows. And because the trend is very strong, the chances are high the sellers are just going to get trapped picking the tops. They all keep their stop loss above these highs. They're picking top once the trend is in play. It is a two-legged pullback. It is a decent setup. It's a bit more advanced because it is a little bit stacked, but based on the strength of the trend and the way it formed, you know it's going to work higher like this. You can see all of those stops got taken out. Spike in volatility. Now, new high, first entry long, count reset. So we always use the price action counting technique. And you can see what is the goal of our strategy. You want to buy at the bottom, at the key entry point, because this is where the significant move will happen. So we're always being patient. Market will correct. There has to be correction in every single trending market. Market never goes up or down in just V-shaped formation. There are always small corrections. Profit taking. We have a visual two-legged pullback. Technically, first entry long. Visually, second entry long. But it is at the EMA. It is at the main trend line. Two key entry points. Actually, three key entry points. Triple test. One top, one bottom, double bottom, triple bottom. The signal bar is small. You're buying at the low. A lot of room to get out. Three key entry points. Triple test. Visual two-legged pullback is great. Great high probability setup. Remember, the strong trend will make you buy setups that are not that easy to buy. A little bit close to highs. Not fully two-legged pullback. But you need to trust the context. Trust the key entry point. You waited for the correction to pull back. Great high probability setup. Actually, I need to mark it like this. Great high probability setup, three key entry points, and market continues working. Here you can see all the trades you bought today generated quite significant runner. So I'm going to redraw downtrend. Only first entry long can get a second entry long. We cannot because we're pushing below EMA. Okay, So right now I need to give it a breather a little bit because we need to push back above EMA. Can I go long below EMA? If we're going to push above EMA, I would like to see a high low. If we're going to continue working lower and the correction is going to be stronger and stronger, I need a failed second entry short. Let's see what's going to happen. Okay, market works lower, so I'm going to widen my downtrend. If I want to go long, I want to see push above EMA and a failed second entry short. But it is taking quite a while. You can see market keeps correcting to the downside. At this point, it is starting to be quite bearish. When you analyze the structure locally, it looks quite daunting that the market is going to reverse. But if you're going to zoom back, you can see the correction is quite insignificant if you compare it to the size of this uptrend. This was a very strong and big uptrend, so the correction may be stronger. That is normal. We can also see that we have first leg down, break, measured two-leg up pullback. So we still expect new high according to trendline rule, following the bias, following the price action. Now we have a failed second entry short, but problem is we broke below EMA, double bar entry, the stop loss is quite big. I don't think we can take it just yet. It didn't form fully part of this move. And now we have a high low confirmation setup, but our micro option has a break new high. And that is a concern. The move down was quite strong. You see break, new extreme, so it is just hanging there. It is more aggressive. Your context and your thinking is correct because we need to get new high. We're above EMA. You're gonna trap the sellers. It's just tad more aggressive. At this point, I'm able to draw a wider option because the main channel needs new high. But as I'm watching the time scale, I can already see it is getting way too late and we can't really be taking setups this late. The market created new extreme. So this is the overall structure for today. Big uptrend, break and new extreme. Every single significant move happens at the bottom of the correction where the key entry points are. Every single move today generated quite a significant run. This was really a great day because you are able to generate a week's worth of profit if you can get filled and you can get some solid runner. So great trading. You can see price action rules, analyze the strength of the trend, look how it is reacting with the EMA because this will tell you if you can be a little bit more aggressive or not, and follow the price action rule. Always look for the short-term channel, and the stronger trends may form setups a little bit sketchier, so you need to be a little bit more aggressive. That's the nature of strong trends. But as you can see, strong uptrend, and we started with a trailing range, price action, buy low, sell high. Once again, don't trade around the news. Today there was no whipsaw, but a lot of times you're going to move up, move down, back up, and it is just not worth it. But there were really no great setups earlier, only one failed second entry long. Other than that, you really had to be patient. But this is typical because everybody is waiting for the FOMC announcement. So there's really nobody trading, waiting for the announcement. So I hope you had a good trading day. I'm going to wrap it up. I'm going to talk to you next time. Good luck with your trading.